it's time for the Word on Wall Street. Top investors watching your money. Joining me right now is Mahoney Asset Management CEO Ken Mahoney, Bulltech Capital Markets Chief Strategist Catherine Rooney Vera, and Michael Lee, Strategy Founder Michael Lee. Great to see everybody this Monday morning. Thank you so much for being here. So the week has arrived, Federal Reserve meeting. Let's kick things off with you, Ken. We've got record inflation, 40-year highs, surging energy prices, and of course this Ukraine-Russia conflict. Many investors are worried about recession as well. What's the impact on the macro story from your standpoint?
Yeah, Maria, great question. So we've only going to see 25 basis points from the Fed this week, but since the Fed started jawboning in September, the two-year Treasury has gone from 20 basis points up over to 1.8%. Credit spreads, especially over the last couple of months, have increased by 30 to 50%, depending on the credit quality you're looking at. And the Chicago National Financial Conditions Index, the liquidity indicator that I watch closely, has been basically cut in half. So we've already seen a tremendous amount of liquidity leave the market, even though the Fed hasn't raised interest rates, and you haven't really seen any meaningful slowdown in inflation, which means either we're going to see a slowdown in inflation dramatically over the next couple of months, or there's a fair bit of tightening that has to come, maybe not necessarily from the Federal Reserve going from 25 basis points to 3 or 4%, but like I said, in that credit spreads and the two-year Treasury going up another 50 or 100 basis points, what that all means is multiple contraction across stocks all across the board. Okay, and as that liquidity leaves, I don't necessarily know we're going to see a traditional debt bubble pops, but it's looking like at some point this year we're going to have at least 1 quarter of negative year-over-year GDP growth. If you talk about recession in the sense of that we're going to need 3 consecutive ones and maybe a substantial decline, I don't know that we're going to see that. We're definitely going to teeter on very, very low growth, and this is not good for stocks overall, especially tech stocks that were trading at 30, 40, 50, 100 times earnings. Those multiples are going to come back down to earth. So I respectfully disagree with Ken. I think you got to own inflation hedges here in the form of consumer staples and energy. I think the supply-demand story in energy is not going anywhere. Hopefully, the Ukraine-Russia tempers down and you lose that short-term catalyst. But that's not going to change. It doesn't look like inflation is tempering at all.
Well, this is the issue, right, Catherine? I mean, you're